Hi, my name's Gavin Richardson. I'm Head of Sales here at Mortgage to Business. I'm here with Jenny, our Director of Sales at Mortgages to Business. And we're going to talk a little bit today about a relatively new product on the market called Bridge to Let. So it's coming to the market. We were fortunate enough to pilot it with the lender, and it's a product that we're now seeing consumers, clients take more of an interest in when they're diversifying their portfolio and looking at different opportunities to actually get better returns and better yields in the market at the moment. So Jenny, what is Bridge to Let?
Bridge to Let is essentially a product which offers two stages to it. It's basically a bridging loan that then rolls into a traditional buy-to-let mortgage. And the reason that we're seeing more and more of these is where clients are looking to buy property and add value. So property that's not currently lettable when they acquire it, or maybe it's not meeting the minimum EPC requirements. But the clients want to retain the property for the long term. And traditionally what people have done for these kinds of properties is they would acquire it on a bridging loan and then refinance to a new mortgage provider afterwards. Whereas what this product does is essentially offer a pre-agreed bridging loan and then buy-to-let mortgage straight after. So essentially it's one straight line across the two transactions rather than having to do two different mortgage applications.
Okay, so less underwriting.
Yeah.
One or two valuations?
There would be an initial valuation and then a re-inspection afterwards. So when we apply for the mortgage, one of the things we have to do is provide the lender with a schedule of the works that are going to be carried out to the property. So the valuer will go out, look at the property and the proposed works in the first instance, and then before exiting the bridge onto the term deal, the valuer will go back out and just check that the works have been done in accordance to the plans, and everything kind of stacks up nicely.
It should streamline the process nicely for clients looking at actually refurbishing. And the refurb element of it, what kind of extent can they go to for a refurb? I mean, is it knocking down walls or?
No, it's a light refurbishment.
Right.
So realistically, the lender would say that it's anything that doesn't require any structural changes to the property, does not require any planning changes, and doesn't fall under the realms of permitted development. So think more along the lines of it needs a new kitchen and bathroom, it needs some upgrades to meet the EPC requirements. If there's a small amount of maybe some damp in the property, it's just very, very
modernisation.
Modernisation, absolutely.
Fantastic, makes sense. So who can have it?
So the thing that's really neat about this product is it's available to both individuals and limited companies. Obviously these days we're seeing a huge upswing in applications for limited company lending.
Right, okay, so it sounds good, it sounds easy, it streamlines the process, everyone gets access to it. There's got to be a catch, so is it expensive?
I don't think it is actually. So traditionally, bridging pricing sits at around between 0.8 and 1.1% per month. These guys, their pricing starts at 0.44% a month. Admittedly, that's for a low loan to value deal, but at 75% loan to value, you're looking at around 0.75% per month. The other thing that's really, really neat about this product is the arrangement fee for the bridging loan is very competitive. So most bridging lenders charge around 2% of the loan amount, and this particular product is coming at 0.75% of the loan amount. So in terms of bridging pricing, actually it's very, very well placed. In terms of the rate that you exit onto, it's there or thereabouts. It's kind of comparative with traditional limited company pricing, so I think between 3 and 3.5%.
Okay, so the rate's competitive, it's quick, it's easy. There's got to be some sort of catch there, but it doesn't seem there is. So any other additional costs or fees that might catch the customer out that they should know about?
Yeah, so you need to factor in the fact that there will be a valuation fee and then a re-inspection fee. And the re-inspection fee is normally sort of around the £200 mark. The other thing to keep in mind is there's a second arrangement fee when you move from the bridging loan onto the term part of the deal, so onto the long-term mortgage, and that's 1.5% of the loan amount.
Okay.
But what you do is save on a second set of legal fees. So it's not bridging loan and purchase legal advice and then remortgage conveyancing. It's just one set of legal costs.
Okay. So the types of properties the clients are really going to be looking at potentially auction purchases, or maybe not through an estate agent, or where quick sales are needed. So is the process longer than normal?
No, I think it's very, very good actually. So I've just done one of these last week and the case went to offer within 6 working days.
Right.
Obviously with all these things it then hangs on the solicitors getting the case over the line and what sort of chain is involved in the transaction. But in terms of moving paperwork across, we find it to be very, very efficient.
Fantastic. Anything else that we haven't caught up there. There's quite a lot of information for our customers there.
Yeah.
Anything else that's potentially really used they should know about it, or if not, how do our clients get hold of you?
Okay, so the two things that I think is really worth mentioning about this product is, first of all, you can borrow up to 75% loan to value of the purchase price, but then the lender will let you move on to the traditional mortgage once the works are done, and that has to be within 6 months of completion. So the bridging loan is available for 6 months, at which point, and you can move at any time during that 6-month period without any early repayment charges. You can borrow up to 80% of the enhanced value, so essentially you get a slug of money released to you when the long-term mortgage kicks in. What you find is often that many lenders will not remortgage against open market value until you've owned the property for at least 6 months. This is really, really neat from that perspective. The other thing just to mention is that the lender can lend on HMOs and small blocks of flats as well. So I think HMOs of up to 8 bedrooms and small blocks of up to 6 flats.
Fantastic.
And in terms of getting in touch with me, my direct dial is 01732 471 647.
Brilliant. Thank you, Jenny. Lots of information for our customers to take on board, but a really exciting opportunity to look at different areas in the market where you might potentially be able to get a greater return than your standard buy-to-let product. So please do get in contact with Jenny, and we look forward to helping you. Thank you.